Meanwhile, taking a look at commodities, and crude continues to hover around the $53 handle, supported by a falling US dollar, and Saudi Arabia said output cuts are bringing the market back into balance. Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, hello to you. We'll come to the crude market in just a moment, but did just want to get your check on today's trade and what you're making of these negative moves.
You know, right now, trade is really quiet. Behind me, people are just waiting for the election, or not the election, but the new president on Friday, the inauguration. You know, we just know that the past few months, this market's been held together by, you know, decent nominal growth and also Trump. And it seems like there's a lot of euphoria. Whether it's well placed or not is a different story, but basically holding the market together. The fact is, 2017 earnings per share estimates haven't changed at, you know, $127, but 2018 at $145 a share is going to need a lot of follow through from Trump. And, you know, I just don't think that's going to happen. But right now, there seems to be just a lot of like a pre-holiday spirit here where people are just, you know, squaring positions and taking care of risk management as opposed to opening new positions.
So let's consider then some of those OPEC oil moves that we are seeing, certainly an OPEC boost, Brent oil fluctuating in the 50s amid cuts to global production. We have a chart, in fact, that I just want to pull up for viewers in the chart, certainly showing the Brent price and that fluctuations that we are seeing in those moves. Just give us your take, Larry, and I guess ultimately the price target that you are watching.
Yeah, so for both Brent and WTI, I've been trading in a very narrow but very volatile trading range since the beginning of the year. And I think that $5 range will continue because, as we've noted before, we won't see credible evidence until middle of February of what's really going on. We do know that U.S. stocks are at a 4-year high, and 30 million barrels more, came out last week, higher year-on-year basis. That got everybody nervous. But on the other hand, you have stories of Kuwait, Algeria, Saudi Arabia already cutting production lower than what they said they would do back in November. And so it just keeps a ping pong activity within a $5 range. At the end of the day, obviously, this all matters, you know, the demand and supply, especially a supply response, et cetera. But I do think the wild card to this could be China and India. We do know that, oil in India, the numbers have not been good lately, but I think there's just been a really hard lack of business confidence recently with their recent demonetization within the economy. But we have to remember that the emerging markets and also China, India will be the wild cards, in my view, of where oil goes in 2017.
I guess the big question at the center of this is whether or not the oil market is rebalancing. Indeed, we've had comments coming through relating to this from the Saudi Arabian energy minister, saying that demand growth is stronger than expected. Market strength could end the OPEC deal in 6 months. So, as I mentioned, Larry, at the heart of this, is the market actually rebalancing?
Yeah, it's almost a joke to ask the question and answer the question because you see what happened to U.S. stocks. But yeah, overall, global rebalancing is taking shape. It just, there's lots of puts and takes along the way. I first had said that I thought we'd see a rebalanced market by the first half of the year. I think that now is a stretch call, but maybe third quarter of 2017. But again, we have to remember that a balanced market doesn't necessarily mean a market that's going to go down. It could actually continue to rise ever so slightly. I do believe that U.S. shale will keep a cap or a lid on oil prices of around $60. But I do believe by the end of the year, we'll see WTI between $55 and $60 per barrel.
If we consider then some of the broader players, we've long talked about, Larry, the role that the US dollar strength is playing within the commodity story and within the oil market. we do have that expectation of Trumpflation coming into play. How is that set to trickle through and perhaps, again, add an additional layer of complication to what is already could be some sort of telenovela?
Yeah, no, it's a great question because, as we noted a few weeks ago, oil really didn't even look at the recent strength of the dollar. Oil just continued to do whatever it wanted to do, no matter how strong the dollar got. And now all of a sudden, there seems to be some sort of correlation. But I really think it's basically how you or what your prediction is on what's going to happen to the U.S. dollar, if it's going to rise, and if so, how much. I mean, I seem to think that we'll see the U.S. dollar stronger by maybe 3% by mid-year, and I think that is a healthy and reasonable goal. Some people are saying 12 to 20%. If that's true, that's going to spell trouble. It's going to spell trouble for the oil market. It's definitely going to spell trouble for the emerging markets, more outflows. That could be disastrous for the global stock market. So I'm betting and also hoping for like a 3%, a gradual rise in the U.S. dollar.
Larry, we will leave it there. Thank you so much for your time this morning.
Thank you. Thank you so much.